as you guys know, inflation's crazy, but we also have this all the financial market distress that's everywhere. So when I talk to just friends, family, and investors, everybody, like nobody really kind of knows what's happening, right? Like we're kind of in uh, this, what do I do with my money, right? Because if I leave it in the bank, it's getting inflate. You know, the inflation is just killing my purchasing power.
Yeah.
But how do I actually pick what to invest in? Because I think we all know that at some point, some assets aren't going to make it, right? Like stocks obviously aren't doing very well right now. We've invested in some alternative assets like cryptocurrency that's obviously not doing well right now. Um, Really, the only thing that's doing well in our portfolio is our real estate portfolio. Um, and that's, but it's not all real estate portfolios, right? Like I think some people still think of real estate like the stock market, where I'm going to buy a house, I'm going to sell it in 5 years, and I'm going to make a lot of money on the sale. That has been prevalent over the last 2 to 5 years, right? Especially the last two, because if you bought anything in 2020, like you sold it for 20% or more in 2021. If
Yeah,
you,
you could throw a dart and land on a good deal.
right. But I think that because that's what we've seen the last few years, people forgot what the fundamentals of real estate actually are. And
Hmm.
that's why people are scared about this asset class, even though it's really the only one that's still kind of holding right now. Right.
Yeah, I was talking with some folks on TikTok, which I mean, you've got a great, which I'm live stream on TikTok, so follow Arian if
Oh,
you're not already. Um, the like if you take Houston for example in 2008, like if that is a worst case scenario, at least it has been in our lifetime financially. Um, Prices didn't really fall. I know they did in some markets,
mm,
but in Houston they didn't. They flatlined, and they flatlined for several years. And investors that bought during that time and still own today, like they've got a multi-million-dollar portfolio, and I know some of them. So it just goes back to the fundamentals. If
right.
you're just buying purely on appreciation, especially hyper appreciation, it's kind of you're putting yourself in a lot of risk. And are you having that conversation with flippers? So I know we were both in a flipping mastermind, and
But mainly just normal investors. Because again, like I feel like the last few years, everyone kind of thought the money was in the appreciation.
mhm.
But we got to remember there's actually four ways to make money in real estate in all investments, but some other investments don't have the four ways, right? So one is appreciation, the other is cash flow. So when we have a property, people pay rent, we pay all the expenses and the mortgage, and we have a little bit extra. So that's cash flow. Then there's tax benefits, which is a hidden way to make money, but that's why a lot of millionaires and really wealthy people have real estate is because a lot of it is tax benefits. And then we also have the loan pay downs. So most of us buy real estate with a loan. Every year we cut off a chunk of that loan principal and that increases our equity. So
Mhm.
even in an environment like this where you said maybe we're going to flatline for the next 2 years, some investors are thinking, oh, I don't want to invest in anything because we're just going to flatline. What's the point? Well, even if appreciation is flat, you can actually still make those other three ways: cash flow, loan pay down, and the tax benefits. So you can still generate a good return, even if from the outside looking in, from the asset price, maybe you're not making a whole lot of appreciation. But if you invest in real estate with thinking of cash flow, tax benefits, and loan pay down, that's still going to beat inflation and you're going to be in a better position.
Yeah, and appreciation's different depending on the class. I mean, single family appreciation's kind of it's there's different fundamentals at play than multifamily, because multifamily is primarily it's income driven. You're buying a business.
Right.
Single family is more just based on like kind comps around the community.